Hey guys, by the end of this video, you will learn a simplified approach to the ICT daily bias. Now, when we talk about bias, we're simply referring to an inclination or an opinion whether a day, week, or month is going to be bullish or bearish. So, with that out of the way, now let's look at how we can identify bias. First off, we want to see and identify a PDRA because at the end of the day, trading is all about price delivery and these will keep us in sync with institutional order flow. And here are the PDRAs we'll be focused on. Next, we want to see a reach of price to any of these PDRAs and trade away from it, giving us a price confirmation like a market structure shift or a breaker structure. And finally, we want to see a draw on liquidity, which will be our area of target or exit, and furthermore confirms our bias. This could be an imbalance or liquidity. It's that simple. Now let's go over each of these PDRAs to drive home these ideas. And if you want the PDF for this presentation, the link is going to be in the description below. So first off, we'll be looking at swing high and swing low. So we want to see price run a swing high on a higher time frame and react quickly away from it, then selling all the way to the sell side. Same can be said for the swing low. We want to see price run a swing low, reacting quickly away from it and trading all the way to the buy side. So let's see examples to drive this home. So here on the Euro USD on the daily time frame, you can see we've identified a swing high and a swing low. So let's see what price does. So we can see how price trade all the way to this particular swing high and react quickly away from it. So now we drop to the lower time frame. In this case is the 4 hours and we can see a break of structure right there. So what we want to see now is price trade all the way to the sell side to the next draw on liquidity, which will be this low or ultimately this swing low right here. So let's see what price does. And there you have it. So you can see our price after the market structure shifts. We had a little retracement into this order block. And you can see our price sold off aggressively, attacking this first target, then ultimately the second target. So here's another example. So you can see here we've identified the swing low and the swing high. So let's see what price does. So you can see how price trade to the swing low and reacts quickly away from it. Dropping down to the lower time frame, which is the 4 hours, we see that there is no market structure shift yet. So let's see what price does. So right now we have a market structure shift. So what we're going to do in this scenario is wait for price to trade back into this market structure shift high or into this inversion fair value gap. So let's see what price does. So we can see price created a fair value gap right here and traded into it, giving us a good reaction right here. So we can still frame our entry right here, putting our stops below this fair value gap. We can aim for this high or ultimately this particular swing high right there. So let's see what price does. And there you have it. So next we're going to be looking at institutional swing points. So we want to see price trade into institutional swing points, which can either be a breaker or mitigation block and trade away from it. So let's see examples on this. So right here on Euro USD on the daily time frame, we've identified an institutional swing point right there. So this is an institutional swing point. So now I want to see what price does. And there you have it. So now let's go down to the lower time frame to see if we have a market structure shift or a break of structure. And we can see we have a break of structure. So let's see what price does. So here we have a very good reaction right here. So here could be our entries, putting our stops above this particular high right here. And we can aim to take profits below this particular low. So let's see what price does. And there you have it. So right here is another example on the 4 hours on Euro USD. So here we've identified an institutional swing points, the high and also the bodies. So let's see what price does. So we've seen a good reaction from this particular institutional swing point. So now we drop down to the lower time frame, which is the 1 hour time frame. And we can see that price has not broken structure right here, but we have a change in states of delivery right here, giving us an inversion fair value gap and also a minor fair value gap right here. So let's just see what price does. So right now we can see how price trade into this inversion fair value gap, giving us a good reaction right here. So we can frame our entry right here, putting our stops below this inversion fair value gap right here. and aiming for this particular high right here. So let's see what price does. And there you have it. So next we're going to be looking at the imbalance, which is also the fair value gap or liquidity void. So here we want to see price return to an imbalance area in price and trade away from it. So let's see examples of this on the chart. So right here, you can see on the daily time frame on the Euro USD, we've identified a fair value gap. So let's see what price does. So we can see how price came into the fair value gap, filled it up completely and trade away from it. So here we drop down into the lower time frame, which is the 4 hours, and we can see we have a fair value gap right here and also a lower fair value gap also right here, which is in close proximity with this order block. So let's see what price does. So we can see how price filled in this particular fair value gap and gave us a good reaction in price right here. So we can frame our entry right here, keeping our stops below this low and looking to exit above this swing high, which is our draw on liquidity. So let's see what price does. And there you have it. So right here is another example. As you can see, we've identified a fair value gap right here. So let's see what price does. So you can see how price trades into that particular fair value gap and trades away from it. So dropping down to the lower time frame, we can see we have a market structure shift right here. So we can wait for price to trade into this particular fair value gap in order to frame our entry. And there we have it. So we can frame our entry right here, putting our stops just above this particular fair value gap, and we can aim for this series of lows or this particular fair value gap. So let's first aim for this particular series of lows, which is our first draw on liquidity. So let's see what price does. Good. So we've hit the first target. So let's see if price reached for the fair value gap, which is the next draw on liquidity. So we can see that price did not get to the second draw on liquidity, which is this fair value gap. So we still did end up profitable as long as we aimed for the first draw on liquidity, which is this series of lows right here, which is a liquidity pool. So next is the order block. Here we want to see price return to a down close candle or up close candle, which is an order block. I want to see price reach for either its high, low, open or main threshold and trade away from it. So let's see examples on the chart. So right here you can see we identified an up close candle, which is the bearish order block. So we want to see price trade either to the low, open or main threshold of this particular bearish order block and trade away from it. So let's see what price does. And there we have it. So we drop down to the lower time frame, which is the 4 hours, and we cannot see any break of structure or market structure shift here. So let's wait for more confirmation. And there we have it. So we can see a break of structure right here. So we can frame our entry right here, putting our stops above this high and aiming for this swing low, which is going to be our draw on liquidity. So let's see what price does. And there we have it. So here's another example. We've identified a down close candle, and in this case we want to see price trade to the open or main threshold of this particular bullish order block and trade away from it. So let's see what price does. So we can see how price trade into this particular order blocks open and trade aggressively away from it. So in this case, we won't have been able to catch this momentum because price didn't give us the opportunity to get in. So most times what you want to do is while price is printing, you want to stay on the lower time frame. And right here, you can see as price trade into it right here, you could see the good reaction. So here could be your entry and you could be exiting before price took out this particular high right here, or you could actually use the 1 hour and you can see we had a break of structure, and the moment price gave us this good momentum, here could be your entry and you could be looking to exit above this particular high. So next will be the previous high or previous low. So here we want to see price return to a previous day, previous week, previous month or a previous session high or low and trade away from it. So let's say examples on the chart. So here's a previous day low on the Euro USD. So in this case, we drop down to the 1 hour. I want to see how price trades into this particular previous day low and trade away from it. So let's see what price does. And there we have it. So we can see we have a market structure shift right there. So let's see what price does going forward. And there you have it. So you can see our price trade into the high of this series of down close candle, and from here on you can see our price reach for this series of high right here, which is our draw on liquidity. So next we've identified a previous week high and low, and in this case we drop down to the 4-hour time frame. So let's see what price does. So you can see our price reach for this previous week high and trade away from it, giving us a break of structure. So from here on, let's see what price does. And there you have it. So here finally we've identified a previous month's high and low, and in this case we drop down to the daily time frame. So let's see what price does. So we can see our price reached for this previous month's high and trade away from it, giving us a break of structure right there. So let's see what price does from here. And there you have it. So you can see how that price reached for this particular order block right here. It's moved all the way to the sell side, attacking this drawn liquidity, which is a swing low. Next is going to be the previous candle open and close. So here we want to see price return to a previous candle open or close and trade away from it. So here we've identified a previous day candle open and close. So in this case we drop down to the 1-hour time frame. So we want to see price trade to either the open or close of the previous day and trade away from it. So let's see what price does. So here we see price trade away from it, giving us a break of structure. So from here on, we can expect price to keep going lower all the way to this draw on liquidity, which is a series of equal lows. So let's see what price does. And there you have it. So here we've identified a previous week candle open and close. So in this case we drop down to the 4 hours, and as you can see the market structure already present is bullish. You can see higher highs and higher lows. So let's see what price does. So you can see we have a good reaction from the open price. So let's see what price does going forward. Now we have a good break of structure, so we can expect price to reach for this fair value gap, which is going to serve as a draw on liquidity, or this particular swing high, which is going to be the second draw on liquidity. So let's see what price does. So you can see we came close to the first draw on liquidity. So let's see if price is going to reach for the second draw on liquidity. So we can see price pierced the first draw on liquidity, almost reaching the second draw on liquidity, failed to reach it. So let's just see if price reach into it completely or comes back and take out this low right here. So let's see what price does. So price eventually took out this particular second draw on liquidity. But if you have aimed for the first draw on liquidity, you would have actually also still be profitable. Finally, we're going to be looking at the rejection block consequence encroachment. So here we want to see price trade to the rejection block CE or mean threshold and trade away from it. So let's see examples on the chart. So here we identify a weekly candle rejection block consequence encroachment, which is the mean threshold of this particular week right here. So the midpoint right there is a consequence encroachment. So dropping down to the 4-hour time frame. So dropping down to the 4-hour time frame, we want to see our price reach for this particular consequence encroachment of that rejection block and trade away from it. So let's see what price does. And there we have it. So we can see our price reach for the consequence encroachment and give us a break of structure right there. So let's see what price does going forward. So here at this point, we can frame our entry right here, putting our stops below this low and probably aim for this series of highs right here, which is going to be our first draw on liquidity. And we can keep aiming for other highs going forward, even all the way to this particular fair value gap right here. So let's see what price does. And there you have it. So you can see our price even traded all the way aggressively, reaching for this series of highs right here. So here we've identified a rejection block CE on the daily time frame, which is the main threshold of this particular week of this rejection candle right here. So we drop down to the 1 hour in this case. So we want to see our price reach for this particular consequence encroachment and trade away from it. So we can see our price reach for this particular consequence encroachment, trade away from it, giving us a break of structure. And right now we can see our price has reached for this particular fair value gap right here, giving us an entry. So we can enter here, putting our stops just above this fair value gap and aim for this particular draw on liquidity, which is a swing low right here. So let's see what price does. And there you have it. So here's how you can go on to identify the ICT daily buyers, free setups with them, and trade on the right side of the market. So if you find value in today's video, hit the like button, hit the subscribe button, and if you have your questions, you can leave them in the comment section and I'll be sure to get back to you. I also recommend you backtest the whole ideas shared on this particular video and find which one resonates more with you. Until next time, see you in more videos.